Did you know you can actually have the seller pay part or all of your closing costs when purchasing a home? In today's video, I'm going to share with you what seller concessions are, how much you can get, and what you should expect. So stay tuned. Well, hey, what's up, guys? It's Channing, owner of Bayou Mortgage. Like I said, in today's video, we're going to talk about how to get your closing costs paid by the seller. Before we dive in, please remember, subscribe to the channel, like this video, drop a comment. It helps us reach more people just like you. So when it comes to getting your closing costs paid for, all of our loan programs, any loan program that's available, as long as you're purchasing a primary home and not an investment or a second home, allow the seller to pay for a portion or all, depending on how much they are, of your closing costs. So how does that work? Well, it's going to depend on the loan program and how much you put down. For most that are needing seller concessions, chances are you're probably putting a lower amount down. So the really cool thing is that if you're using a loan program like FHA, USDA, then the seller can pay 6% of the purchase price towards your closing costs. So this is going to be typically more than enough, more than they'd be willing to give to help you cover your closing cost on most homes. We'll link to a video that explains what closing costs are up here or up there. So the seller can cover those costs up to 6% on FHA and USDA, and then USDA actually has a cool benefit where if it over appraises, like if you buy the house for $150 and it appraises for $160, you could roll $10,000 into the loan. Only loan program that does that, and that's not what this video is about. This video is about seller concessions. So FHA allows them to pay up to 6%. USDA allows them to pay up to 6% of the purchase price. Conventional can go up to 6%, but I believe only if you put 10 to 20% down, which honestly most first-time home buyers aren't doing. So the limit for all intents and purposes on conventional is 3%. At 3%, you're going to get a lot of your closing costs paid, but maybe not all of them unless you're buying like $300,000, $400,000, $500,000, and then of course the bigger loan amount will help you compensate for the additional closing costs. But basically, if you want to use this feature, number one thing is you need to let your realtor know, right? We put it, sometimes our clients need it. That's the only way they can qualify for a loan. You may be in the same situation. So we put it on our pre-approval letters how much in closing costs they're going to need on estimate in order to purchase a home. But you want to make your realtor aware because it is going to affect the way you negotiate. You may not be able to negotiate as much off the purchase price or any off the purchase price, especially in this low inventory market, that you could have. You may even have to go over the purchase price in order to get those seller concessions, but it is doable, it is possible, and as far as where we lend, it's fairly common, and I've lent everywhere from Texas to Louisiana, and it's fairly common in both of those states. Now, the hotter the market, the more expensive the homes, sometimes the sellers are less willing to do that, but you can always find someone willing to negotiate as long as you're willing to negotiate back. So this is a cool way because it allows you, closing costs can be 3 to 4% of your home cost, sometimes 5%. You're $5,000 to $10,000 typically because it's insurance and all these different things that are wound up into it. So having the ability to allow the seller to help you pay for this is a great way to put yourself in a position where you don't have to delay purchasing a home. And the reality is $5,000, $6,000, $7,000 on a 30-year mortgage payment isn't going to make a huge difference on that monthly amount. I mean, $20 maybe? Do the math. You'll see it's not a lot versus having to either come up with all that cash or being out all of that cash when you're moving into a new home and you kind of want to conserve some of that capital in case you need to make changes to the place or fix things or do anything like that. So seller concessions are great. If you haven't thought about them or didn't know about them, I hope this video, I know it was helpful to help you understand how they work. If you have any questions, drop a comment. As always, like the video, subscribe to the channel. I'm Channing, and I look forward to talking to you soon.